Hello, traders, investors, and crypto fans. Welcome to our channel where we bring you in-depth analysis, hot news, and reliable projections about the blockchain universe, Web3, and the trends shaping the future of digital money. Today, we're going to talk about a powerful recovery on Bitcoin S-chart, what analysts call a V-shaped recovery. But that's not all. Experts are already pointing to new targets above $120,000, which could mark the beginning of a new bullish phase for the king of cryptocurrencies. Now, let's dive together into what's happening in the market, identify key levels, and understand why this movement might be the first step toward new historical highs. Last week was marked by high volatility in the crypto market, but the highlight was Bitcoin, BTC, which recorded a V-shaped recovery after testing local lows near $100,000. According to Diego Pole, analyst at Crypto Investidor, this technical formation indicates that an uptrend may be returning by, at least in the short term. The weekly candle of BTC closed compressed on Sunday, June 8th, practically at the same level it opened, showing an important consolidation after the recent drop. But things got interesting right after. On Monday, June 9th, Bitcoin rose above $108,000, according to data from CoinGecko, driven by a stabilizing political scenario, at least temporarily. We're talking about the public clash between Donald Trump and Elon Musk, which shook the market in previous weeks. With the cooling of that tension, prices responded positively, suggesting that the $100,000 level may have marked a local bottom, as highlighted by an analysis from Sentiment, published the previous Friday. A maturing market, less dependent on public figures. The weekly report from QR Asset Management pointed out this movement as a sign of sector maturity. We will certainly see more developments from this dispute and new political moves in the years ahead, but what matters is that the technology behind the sector and its practical application has long surpassed dependence on specific public figures. This means that although influential figures still impact the market, crypto now reacts more strongly to macroeconomic conditions and fundamental factors, a trend that's become increasingly clear over the past few months. Macroeconomic scenario: CPI, Fed, and inflation pressure. Globally, markets are now focused on U.S. inflation data, especially the Consumer Price Index, CPI, and Producer Price Index, PPI, both due to be released this week. There's high anticipation because President Trump's tariff policies could directly affect inflationary pressure. Data from the U.S. Department of Commerce revealed that the trade deficit fell more than 55% in April, dropping from $138.3 billion to $61.6 billion, thanks to a 16% decline in imports and a 3% rise in exports. So far, this hasn't been reflected in price action, but that could soon change. A recent report showed that several U.S. companies are preparing to raise their prices in the coming months, citing import tariffs as justification, says QR Asset Management in its latest bulletin. This potential inflation spike could keep the Federal Reserve, Fed, cautious during its upcoming monetary policy meeting next week. While the market gives a 99.9% probability to interest rate stability, the remaining 0% shows there are still some who fear a possible hike. Still, expectations remain for eventual cuts, though they are likely come later and less aggressively than many had previously priced in. And if rates stay high, consumer costs will continue to be pressured, something that already starting to show in the real economy. Technical analysis of Bitcoin. Where is the price going? According to Diego Pole, analyst at Crypto Investador, Bitcoin's recent behavior shows clear signs of a structural recovery. After testing the $100,000 level, prices rebounded strongly, forming a clear V-shape on short-term charts. In addition to holding a key psychological level, BTC did not break below the 50-period moving average green line on the daily chart, or the 9-period exponential moving average EMA on the weekly chart. Both considered important dynamic supports and trend indicators within a market cycle. The V-shaped recovery seen on shorter timeframes typically signals a classic bottoming pattern, explains Pole, and this could mark the start of something bigger. Technical projections rally toward $120,000 to $150,000 for the Analyst. This setup suggests that the uptrend should continue in the coming days or weeks, with initial targets set between $120,000 and $150,000, levels that, if confirmed, would bring Bitcoin close to its previous all-time highs. In the short term, the $100,000 support remains crucial. As long as it holds, the bias stays positive. On the flip side, a break below $100,000 could open the door for a deeper correction, with secondary support projected between $95,000 and $90,000 outlook for the coming months. As reported recently by Cointelegraph Brazil, analysts believe BTC could retest the $100,000 zone before surging to new historical records, some of which are already projected above $140,000. This kind of behavior is common in previous cycles, where repeated tests of key levels help consolidate the base before the next big move. With the Bitcoin ETF already live and traditional markets beginning to recognize digital assets as a legitimate part of institutional portfolios, the path forward seems clearer than ever. Bitcoin continues to be one of the most watched risk assets in global finance. Don't forget to subscribe, hit the like button, and comment. Do you think BTC will reach $120,000 this semester? Don't forget to hit the bell icon to receive notifications for new videos.